PPI just came out and it came in really, really high. The expectation was 0.3% increase. It was actually 0.6% increase. Now, this is coming off of last week when CPI was just a little bit higher, about 0.1% higher. Now, March 20th, next Wednesday, the Fed is making its decision. Here is what the CME group is predicting. Rates are staying the same. Now, guys, remember what it was just a few months ago. A few months ago, people were talking about 7 rate cuts in 2024. We're going to go back. Don't worry about your home mortgage. It's going to be back to 4 or 5% or 3% soon. Guys, the predictions are insane. There's a very big YouTuber that's local. I met with him 2 years ago. He said Fed will start cutting rates in early 2023. Absolutely wrong. I laughed when I heard that, not because he was wrong, because why would you even try to make that prediction? It's a ridiculous thing to do. If you see people trying to make predictions, just avoid them. There's no way of knowing. Somebody I know on Facebook was predicting a March 11th stock market crash. Moron. Why would you ever think that? With interest rates, it's about telling a story. Where's the story going? Guys, I'm in favor of higher rates. As an investor, you should be in favor of higher rates. PPI and CPI are different, but they work together. CPI is from the consumer perspective. What's the consumer paying? Is it going up or down? PPI is the producer price index. What's the producer paying to get those goods out? Now, a high PPI can lead to a high CPI. They work in tandem that way. When the producers are paying more, how do they offset that? Increase the prices to the consumer. So, again, this is 1 month of reaction, so I'm not trying to extrapolate out forever. But seeing a double of what was expected, are we going to see higher consumer prices here in the future? I don't know. But right now, a 99% chance they keep rates the same. Add Neil Kashkari, who's actually from Northeast Ohio, went to Western Reserve Academy in Hudson. He's the Minneapolis Fed governor. He came out recently and said, if the economy is doing well, why would we cut rates? Thank you, Mr. Kashkari. That's exactly the question we have been asking. Why cut rates if the economy is doing well? You don't want to spur on that economic growth. Why? It's inflationary. The Fed is scared of inflation. They want their 2% core inflation that excludes food and energy. But it's still something they need to fight for. They'd rather have the lower prices. The only time they would cut rates, I think, is if they were worried about deflation. I don't think that's a worry anytime soon. Now, I have no idea what the Fed's going to do this year. I have no desire to find out. What I'm here to do and what we're here to teach in this channel, in our main channel, Everything Money, is to sit there and teach a process of how to think about money and investing. You and I are going to differ on what we find value in, absolutely. But we're going to be consistent in how we think about money. And I look at the economic forecast and go, what is the purpose of all this? What is the purpose of all this? I used to worry about these things just like you. I used to sit there and say, what's the Fed going to do? Are we in a recession? At the end of the day, as I became what I considered a better thinker about investing, I thought to myself, I want less dollars chasing the investments that I want. Because the more money that's chasing those investments, the higher the prices go. I want lower prices. So to me, higher interest rates gives me an incentive to park money in cash. I can make 5.3% right now on a 90-day treasury. Now, that doesn't mean you get 5.3% over 90 days. It means if you kept rolling them over for a full year, you get 5.3% as long as the rate stays there. That's pretty solid, guys. Just 3 years ago, it was 0.05%. That's an incredible difference. It's 100 times higher than it was just 3 years ago. We're trying to teach this process because everything in this world is so short term. I'm just doing a tweet just now about EV and how it's amazing to me that now EV is just completely discarded and stupid. When 3 or 4 years ago, Paul, you don't get it. EV's changing the future. Tesla's the most amazing car company ever. It's more than just cars, blah, 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 blah. And now the stock went from a peak of 414. It's now at 170. And Wells Fargo just came out yesterday and said, you know what? We were saying 223 a share 2 months ago. We think it's worth 125 a share now and could get as low as 44. What? What happened to EVs changing the world in a matter of 3 years? But guys, that's not a new story. This happens all the time in investing. AI is the big hype right now. AI will likely change the world, just like EVs are changing the world. but it doesn't mean that every investment involving AI is going to be a great investment. If you look at the EV companies, and we might be doing a video on this soon, look at the EV companies from 3 years ago to now. 3 years ago to now, there's only one EV company that is up that I found. Only one. It's only up 9% over 3 years. The rest of them are all down, some of them down to zero almost. That's the incredible thing. So when it comes to PPI, CPI, I enjoy just looking at them, just to read about them, see what's going on. But I don't sit there and make any investment decisions based on that. I'm making my investment decisions based on, can I find a good company at a good price? That's the key there. If you can, the rest of it will work itself out. Look in the last 40, 50 years, 60 years, 100 years, go 20 years, go 10 years. We've had booms, we've had busts, we've had recessions, we've had assassination attempts, we've had wars, we've had, nuclear threats. We had so many things. And guess what happens to the US economy? Guess what happens to the world economy? It gets better. Everyone's life is many, many, many times better today than it was 50 or 60 years ago. Now, you might sit there and say, Paul, what does that matter to me? I'm 40, I'm 30. I don't care what life's going to look like 60, 70, 80 years ago. I want to care about 10 years from now. Okay, I get that. I understand that fully. But you've got to remember that making the right decisions today will make those next 10, 15, 20 years that much better. And guess what? It could mean just being prepared for what could happen. I don't think the market's going to do well over the next 10 years. Does that mean I'm scared? No, I'm still buying stocks every single month. Why? Because there are still good companies at good prices. And if I'm lucky enough to find them at lower prices, because everybody's exaggerating all of this or whatever it is, even better. And that's the process we're trying to teach. So no matter what the Fed does next week, no matter what PPI and CPI comes in, remember, we had 18, 20% inflation 40 years ago. We had 10% inflation just last year and 15 months ago or whatever it was. And guess what? We got better. Now, I know you clicked on this video because of one reason. You want to make more money. Investing with confidence and finding your own path is the absolute best way to make money in the long run. And I also tell people, you're the product of the people you surround yourself with. If you surround yourself with people who are doing the things you want to do and are where you want to go, you're just naturally going to get to that point. And I'm giving you that opportunity to spend time with thousands of successful, like-minded investors like myself and other great ones out there to elevate your game today and for decades to come that'll make you more money. Now that I'm surrounded by these like-minded investors, I can ask questions, bounce ideas off of them, and there are people that are starting their careers with millions of dollars net worth, and we have the full gamut. We have people who are just starting their careers just out of college, and we have people with millions of dollars in net worth. So no matter where you are today or where you want to go, you'll be able to talk with anyone who's been where you are and where you're going. I've invested millions of dollars into this community and software because this is the software my team and I use every single day to make better investing and financial decisions. And you're one connection away from changing your life. And today, we're running a great promotion for our community. $7 for 7 days. Click the link below or go to everythingmoney.com. So if you're here and you want to learn about PPI and CPI, it's a great place to be. I love talking about these things, what they mean, reacting to them. It is exciting stuff. There's no denying that, and I love learning about it. But I don't make any of my investment decisions because of that. And I want you to be able to get to that point in your life, confident and comfortable saying, hey, I want the worst days because I'll become a better investor. I'll be able to invest more and buy better companies at better prices. PPI, CPI, whatever it is, these decisions should not matter the companies you invest in. And if you're smart enough to dollar cost average and a low cost ETFs, that should not change your plan, even though some news could end up being bad for the short run of stocks. Make sure you follow this channel because we're going to do other reaction videos, especially next week when the Fed presumably keeps its rates exactly the same here. So if you want to learn more about my stock buying process, watch this next video where I go over the 13 stocks I currently own and I'm adding to as time goes on.